Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, May 31st. Hope you guys had a wonderful and safe Memorial Day weekend here, and thanks to the vets and their families for all the sacrifice they made for us here. Let's kind of go into it here. We got a lot to cover this week. This week's got quite a bit of economic data to come into, a lot of important ones. Thursday is probably the most quiet of the day with the weekly jobless claims, but this week we got jobs numbers coming on Friday. We got some manufacturing this week with ISM services. First we'll start with today. We'll have the personal income for the month of April. So as you can see, it remained a nice steady pace up there. So we had a 0.4% increase back in March. It was supposed to continue that same increase, and it did, given an expectation of 0.4%. Now here we got consumer spending in the month of April. So we had nothing in March, and we exceeded those expectations. So the forecast was at 0.7%, and it came at 1%. So great numbers right there. Nice rebound after March. Core inflation. This is basically when you strip out the food and energy and the PCE, personal consumption expenditure. We got the core inflation. So we had a 0.1% increase in the month of March. April forecast at 0.2% and came in at 0.2%. This leaves us here over the last 12 months at 1.6% clip, getting us a little bit closer, but not really. We had the same thing at March at 1.6, and the previous month before that was at 1.7. So we did dip back a little bit further last month. So this is something to keep an eye on as well. The Fed would like to see us at the 2% range in the core inflation. So they'd like to see that kind of rising. Case-Shiller home prices. This is they do a study on the 20 largest markets of the U.S., and they showed a 0.7% increase in the month of February. And the month of March, as you can see here, it came in at 0.9%. And basically that left them at 5.4% year over year versus 5.1% before that. So a nice increase for the month of March for home prices. Chicago PMI, this is manufactured in the Chicago region, and that one dipped. This one contracted. We've been kind of seeing that on the East Coast with Philadelphia and New York, and now we see Chicago here. We had as we saw here at 50.4, anything at 50 or above is considered expansion, and we're hanging by the thread here, and we dipped just below that to 49.3%. Consumer confidence also dipped, as you can see here. So previous reporting back in April was at 94.7. We thought it was actually going to go up to 96.7, and actually dipped down to 92.6. So something else to kind of keep an eye on. So kind of a mixed bag here. Good news on the personal and consumer spending, income and spending here. Inflation's looking better in Case-Shiller, but not as good on the Chicago PMI and consumer confidence here. Stock market's a little mixed as a result. I mean, rightfully so. When you get a mixed bag of economic data, you're getting a mixed bag on the stock market. Now, we also got the couple things coming up here this month. Now we got the Fed meeting up here about another week or two for their FOMC meeting. There's been a lot of strong talk about rates going up. Now, it did go up. The Fed funds futures did go up for this month, but I don't foresee them raising the rates, and I think a lot of other economists are kind of agreeing with it. They're not going to raise the rates this month, but there's a good chance that they could raise it in July, primarily because also this month we got something going on, what they call the Brexit, which is Britain's voting on June 23rd, which is a week after that the Fed will be meeting about possibly withdrawing from the European community. So that could be a lot of economic factors right there that could come into play, and we're not sure exactly what the Fed's thoughts are as to if it might influence the U.S. So as a result, we think they're going to hold off at least until the next meeting to see how that plays out before they decide to raise rates or not. Today for the bond market here, as we see a 100-day moving average here, we did touch off of that. We do have the 10-day moving average, which we're just above that. We're up about 3 basis points currently. And then we got the 25-day moving average. So right now we're just above the 10-day moving average and the 25-day moving average here. Now, with all the data we got this week, it's possible we could have a breakout for one way or the other direction. So I'd be very cautious as to where we are, as we got the 100-day moving average coming up, which could create pressure. 10-day moving average is right now starting to become hopefully a floor for us, as we did touch off of it on Friday where we left off. So let's kind of see where we are, but be very cautious. And then of course we've got the 25-day moving. At some point will be kind of coming down. Will kind of come down further as well and create more pressure as to pushing us to go up or down. All right, folks. Sorry for the long report today, but we had a lot to kind of go over, and I hope you guys have a wonderful day. Thanks for watching. We'll see you guys tomorrow. Take care.